Welcome. In this video, will Xcn coin continue to rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. The asset, which has been under pressure on the price chart for a long time and has maintained a downward trend structure by constantly forming falling lows and falling tops, has finally started to exhibit a very promising behavior towards breaking this cycle. In technical analysis, a falling bottom and falling top pattern is one of the classic indicators that the market is under the control of the bears. These patterns show that traders consistently prefer to sell at lower levels, while price attempts to rebound always get stuck at lower highs. Therefore, during periods when this pattern persists, bullish expectations are weak and the market is generally cautious. However, the development currently clearly observed in the charts indicates that this negative cycle has begun to break. Recent analysis clearly shows that the price formed a bottom above the previous low and then immediately afterwards made a higher high, breaking above the previous high. This is an extremely important structural transformation in terms of technical analysis, because it shows that the downtrend has ended and is being replaced by a new uptrend. This transformation suggests that market perception is now starting to change and investors are starting to take positions with more bullish expectations. In particular, such reversals often mark the beginning of a strong trend. When the price first makes a higher low, this indicates that sellers are no longer as strong as before and cannot push the price lower. The higher high that follows this initial signal indicates that buyers have taken control, confidence in the market is growing, and higher levels are now willing to be tested. What we see when these two structures are combined is a combination of a rising low and a rising high. This structure is classically considered the beginning of an uptrend. Uptrends signal a period of great opportunity for investors. This is because such structures indicate that the price is more likely to move upwards in a more stable and gradual manner. This means that the environment is favorable for both short-term traders and medium to long-term investors. In technical analysis, this transformation means not only a change in a pattern, but also a complete reversal of the supply-demand balance in the market. Sellers are now in a weaker position, while buyers are in a more willing and dominant position. Moreover, this ascending structure also provides an extremely important advantage in terms of support resistance levels that are often followed in technical analysis. The price may now have the strength to easily break through levels that previously worked as resistance. Rising lows indicate that the price has strong supports and strong buying reactions are coming from these supports, while rising highs indicate that the price is moving towards new target levels and can reach higher levels after each correction. This structure also proves that trend-following traders can confidently take positions. In addition, positive developments on the volume side indicate that this transformation is healthier. Usually, during trend reversals, volume is expected to increase as the price rises. This is an important indicator that there are strong buyers behind the price action. In other words, not only the technical structure, but also the trading volume should support the rise. This may be the case right now, as the price is now starting to form higher lows and highs, and these moves seem to be supported by volume. Another important thing to note is that this type of trend reversal is much more meaningful, especially if it is observed on larger time frames. For example, these patterns on the 4-hour, daily, or weekly charts provide more reliable signals and can be a harbinger of longer-lasting uptrends. Therefore, the current trend reversal, if observed on higher time frames, is a strong signal that the market has significant upside potential. But we can't decide the analysis by trends alone. Let's look at other metrics. Stay tuned. Another positive structure on the chart is the formation of a distinct ascending curve, which is very valuable for understanding the direction of price movement and the behavior of investors. This type of curve, that is parabolic or curved, usually indicates that the market is on a gradually accelerating upward path and that this movement follows a certain logical pattern. In technical analysis, this type of curve is used as an alternative to a trend line, and it is especially important when the price is repeatedly supported at certain points and turns upwards. The curve in this analysis literally worked as a kind of resting and recovery point for the price. When we look back at the price action, we can see that although there have been corrections on this curve from time to time, the price has managed to react upwards every time it touches it. This shows us that this ascending curve has so far acted as a strong dynamic support area. When the price approached this level, buyers became more active, and the price moved up again with the upward reaction. When we examine this structure a little more closely, we can notice that these jumps occur with the increase in volume, especially in certain periods. These volume-driven rallies suggest that market participants consider this curve as an opportunity zone, picking up at these levels and opening strong positions. In addition, the fact that this curve has been tested many times but has never fallen below it confirms that this level is closely monitored by investors and is a technically reliable zone. As long as the price does not move below this curve, the bulls are in control of the market, meaning that the buy side remains dominant. In technical analysis, levels that are consistently touched but not broken become a psychological support over time. In this case, traders become more willing when the price approaches it, because they know that there have been strong bounces from this area in the past. Thus, this ascending curve is no longer just a technical, but also a psychological support zone. When we project into the future, if the price corrects back towards this curve, it is quite possible that a strong bounce will occur from here again, just like in the past. Of course, nothing is 100% certain in technical analysis, but it is quite possible that a support structure that has worked many times in the past will work in the future, and it is natural for investors to act with this expectation. The slope of the curve is also an important detail here. If the curve is not too steep and is moving more horizontally, this indicates that the uptrend is healthy and steady. Overly steep curves often trigger unhealthy rises and possible sharp corrections, while more moderate curves increase both sustainability and investor confidence. The currently observed curve is balanced and shows that the price is moving in a controlled manner. Such rising curves also serve as a guide for trend-following investors. Especially in short and medium-term investment decisions, such curved support zones are very helpful in determining entry and exit points. While the areas where the curve works as support are considered as buying opportunities, in case the curve breaks, investors can set their stop-loss levels according to this curve, as it may be the beginning of a new trend. However, in the current situation, we can say that the curve is still intact, and the price continues to hold on to this support. The fact that the price is moving above this curve is also a clue that the big picture uptrend is continuing. This is because such curves usually represent the lower boundary of an uptrend, and corrections along the curve provide a basis for new highs to form. In this case, the possibility of new highs is also raised with the reactions from the curve. So as long as the price continues to bounce off the curve, higher levels are likely to be tested each time. One of the strongest technical developments on the chart is that the price has finally managed to break back above the 200-day exponential moving average, which it has been struggling with for quite some time. This is a very positive sign, not only for short-term traders, but also for those taking medium and long-term positions. This is because in technical analysis, the 200 EMA is one of the most critical indicators of an asset's overall trend, and staying above or below this level is often one of the factors that directly affect market psychology. The 200 EMA is often used as a reference for long-term direction. Price action above this average indicates that the asset is generally in a bull market, while periods below it indicate that some indecision or bearish pressure may be in effect. Therefore, the fact that the price has now broken above this level again to the upside indicates that a positive perception is starting to form in the market. Buyers are becoming active again, and strong signals are emerging that the overall trend is turning upwards. The 200 EMA shows us long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.